Hey, good morning, everyone. Happy Monday. It's 6:48 a.m., March 23rd, and prices of Bitcoin currently at 58.72. So it looks like overnight we did see a decent amount of selling happen. And even yesterday, just as the weekly closed, I think we just saw this, big stretch down all the way up from 61.30 down to about $5,700 or so. All right. So let's look at price action, where we are, where could we be going for the rest of the day and the rest of the week. Okay. So first things first, I wanted to take you guys on a little journey of where Bitcoin has been over the last week or so. Okay. So first things first, right? When we draw out this channel, we have a high of the channel right here and a low of the channel right there. Okay. So that creates our first two touches, right? And so we traverse in this channel kind of like this, a little bit over here, and then we go all the way up here. And then after that, once we start touching the bottom of the channel, as you can see like that, usually the channel is just, the more touches you have on the bottom of the channel, or even the top, right? The channel itself gets weaker, especially this particular area. Okay, so the more times you keep hammering, this area right here, it gets weaker and weaker. Okay, eventually it breaks, right? And once the channel breaks, what happens? It breaks, tests that same area of the ascending channel as resistance, and then starts breaking down. Then we start drawing in a descending channel, which is from this high that we created around 69.50 to this low that we put in around 56.54 right there. Okay, so we have this kind of broad movement so far. Okay, and now we're essentially staying in the top half of the channel. All right, now if we look a little bit deeper and a little bit internally, here's what's happening. All right, so first things first, okay, we have this another descending trend line right here that's holding down price from this particular high touch of the channel. Okay, and then this one that we put in around 61.50 just yesterday. Okay, so this touch, and now you can see we're smashing against that touch, but unable to break it. All right. Now, if you guys know my strategy, one of my strategies is to look at weekly opens, highs, and lows. Okay, in this particular case, this is the open right here. I think this is the low right here. Actually, let me go check it out. What's the low in this candle? Low is 56.83. So that is low right there. Yep. So that's the low right there. Okay. So we went, open right there, went to a low right there, and we put in a high right there around 6,000 so far. Okay. So our trading range is really between this low and this high, right? And so what we're seeing right now is just a movement inside that trading range, because remember, this is the low, this is the high, like that. That's all we're doing so far. Okay. Let's see if I can go to this chart right here and draw something out. Let me see here. Okay. And let's pick up a parallel channel. Okay. Parallel channel. Okay, there we go. Okay, so that's essentially our parallel channel so far. This low, this high. Okay, so notice we're right now just above the EQ. Okay, meaning the 50% fib of this entire channel, right? So as we're moving down or up, okay, what you want to pay attention to is if you start seeing price break down below weekly open, which is this blue marker around 5820.5. All right, that is probably going to be more bearish. All right, and then the next step that you want is you want price to break below this low, which is around 57.66, which was this previous base right here. And then lastly, it would be over here around 56.83, which was the weekly low so far, right? So remember, price will always move from level to level, folks. It's never that easy to just say that, okay, we hit this level and now we have to go straight down, right? Or, we hit the support, now we have to go straight up. It's really just not that binary in a sense. Okay, you have to look at price from level to level, and you have to sort of respect the technicals that come with it. Okay, so in our community, we've actually been short since I think 6,075, 6,100, somewhere around that area. All right, and so what we're really looking at now is essentially, price to show us that we have more confirmed downside. Okay. And we're going to be either adding on to our position based on that, or we're going to start trimming and taking profit based on that. Okay. Now, so far, like I've said, we've done all the right things. We've created this descending trend line right here, which indicates that instead of the larger parallel channel from this high to this high, or this high to this lower high, we're now creating a more um, steeper trend line like this, right? So the steeper the trend line, I call them fan trend lines, okay? So usually, the next trend line that you want to see is maybe, let's just say something like that that comes off it. So let's just say, price starts breaking down and it starts doing something like this, okay? It starts going like this, tap, tap, and it starts grinding down, okay? That's what you want to see in price, okay? Because that indicates that the momentum of sellers is getting heavier. So imagine, when you're moving up in price, right? It's the same thing, right? You're kind of going like this, and then you're creating a different angle, and then different angle, and then you're just going straight up, right? Because that indicates that, okay, well, first, we were kind of moving like, we're kind of moving like this, and then from here on up, we're having another steeper trend line. And then from here on up, we're just going straight up. Okay. Those are the ways that you can indicate the strength and momentum of price action. And that's the upside. So same thing goes with the downside, right? So for going down, right? So you want to see price breaking down like that, like that. And then once price, starts accelerating down, it should just go down straight like that. So first, right? The trend line was kind of like that. Then the trend line became like that. And then the trend line was just a straight parabolic drop, right? So just, something to look at when it comes to identifying momentum and strength as per trend lines, okay? So let's look at the macro markets and try to figure out, where we are right now in relation to where the macro markets are going to open. So the S&P 500 mini futures opened yesterday at about 6 p.m. All right. So far what we see is, a big drop off when the futures open. Okay. Push back up, and now it looks like we're dropping off again. Okay. Now, as the stock market opens for Monday, let's look at the global indices and see how they fared. Okay, so the European markets, again, sold off another 3.4%, 3.7%, 4.3%. Across the board, the Asian markets pretty much sold off pretty heavily, right? 7% right there, about 4.86% for the Hang Seng. The Taiwanese exchange, the Taiwanese index right there, 3.73. The South Korean exchange right there, 5.34. I don't know, I think this is Indonesia. I can't tell. 9.12%, and the Shanghai Composite, which is the China exchange right here, dropped negative 3.11%. Okay, so across the board, all we're really seeing is red, right? And given the fact that the ES, which is the E-mini futures for the S&P 500, also sold off, and on top of that, okay, oil dropped off significantly yesterday, right? Oil went all the way down, folks, to 20.84. It dropped off significantly. Okay, so the fact that major indices across the world, S&P 500 mini futures, and oil have dropped off so much, it looks like we might be getting ready for a bloody week ahead. Okay, and so it's going to be kind of interesting to see what price does for the next several days, because now we have a full week ahead. Unemployment numbers for the US should be coming out this week. Analysts across the board, whether it's JP Morgan Chase, Morgan Stanley, Goldman Sachs, have already predicted a contraction in the GDP and economy. Unemployment numbers are predicted to be about negative 20% in the next month or so. There's pretty much grim news across the board. And on top of that, major parts of the economy are still, shutting down, right? Because the markets across the world are essentially showing you that we're still not able to control this virus. More people are dying. More people are getting infected. Major parts of the supply chain are getting impacted. So The point is that, the Fed has been really trying hard to inject as much money into the markets, but the markets have essentially been saying, hey, we need more, or this isn't going to do it. So I think overall, you need to take a more conservative view and a conservative picture on the markets, especially if you're invested in Bitcoin. You know, um, for me, I still have a short bias. I personally think that, where is it here? If we start looking at this particular area, right, where we are in terms of price action, okay, zoom into this a little bit more so you guys can see. All right, so basically, in my opinion, all we've really done is this, right? We created a high, a lower high, and so far we've created a low, and now we're looking for another lower low. Okay, once we cement that lower low, lower prices are almost going to be guaranteed. All right, but until then, it's going to be a little bit tricky in this particular area. And one thing I'm afraid of, as long as we stay above this weekly open, which is that blue marker around 58.20, as you can see, right? I'm always afraid of bots and algos going through shady business of the books being so thin, so slicing up all the way to this red box right here, and then smashing back down could be very possible. It's happened before, right? It's happened many times. I mean, I can show you an example where it's happened. Let me see here. Let's see. Let's go on the 1 hour time frame, and I'll show you guys pretty clearly. So remember this happened right here, right? Price moved up almost. What is it, from the low to the high? 10,183. Wait a second. Let's go into this. 10,183 low to a high of 10,550. Right, so basically price moved, and I remember this move because I was watching in the middle of it. It moved almost 3.63% in less than 5-10 minutes. Okay, and not only did it move straight up, but then it moved down, but then it moved up again right here. So the point is that it's moves like that that really scare me in this market, because unless you have really severely deep stops, like somewhere up here around 7,200, 7,300, your short position is just not really that safe, And so that's kind of what I'm concerned with, is that kind of scam wick that we might see, because the books are also so thin. And, with the equity markets just opening in about 2 hours or so, 2.5 hours, or I guess hour and a half, shenanigans could be afoot. All right. So do be careful on that. Okay. Now, with that being said, in terms of price action, one could look at this, in a both bullish and bearish manner. Okay. In the bearish manner, on the higher time frames, it's very clear, right? Number one, we use this particular area right here, okay, which was 64.10 support in 2019 December, right? We broke up all the way to 10,500, smashed down to $3,600, and now we use that same area as resistance, as you can see. Okay, so what does that say? Well, that essentially means that the bears have essentially shielded this area from being broken, and now they've garnered strength to keep driving price down. Okay, that's what that means to me. All right, now what are the next levels in terms of higher time frames? Well, number one, this is the low right here around 58.70, let's just say. Okay, we need to see a daily close below that. Okay, a daily close below this area right here will be will essentially cement the fact that we're going to go down further. Okay, but until we keep teetering around this area, it's gonna be a little bit tough. Okay, it's gonna be a little bit tough in a sense that we don't really know if we can sort of go back up, push back towards 6.4 or 6.5, and then come back down, or who knows, we might bounce off the support, push towards the high that we just put in right there, and then come back down. There's many different scenarios that you could play. But the bearish scenario is that you want this marker to break, because this held as resistance. Now you want this to break as support. Okay. On the smaller time frame, like I've said, what we want to watch out for is price breaking, even smaller time frame resistance levels. Number one being, first level in our way right now is this 59.10 marker right here, all right, which comes from this low that we put in, bounced up, smashed up into previous trading range right here, and now we're, breaking down, right? All we're doing is creating lower highs, like high, lower high, lower high. And for all I know, this could be another lower high that we're about to put it, okay? Um, Now with that being said, okay, if we do smash up past this, right, I've reduced my stop to 6,000 because I don't foresee price going past this and still being bearish, okay, because then we will have reclaimed this marker right here, which is 59.10. We will have taken out this high and this high in terms of short positions. So it's very possible that we go all the way up to at least 6,090 and potentially even higher, okay? But just, again, something to be aware of, all right? Let me see here. Now, I do want to talk about the long scenario, right? I don't want to sound bearish all the time because, it's not that I'm foolishly bearish. It's just the fact that the market itself is not showing me any, semblance and strength, right? So it's hard for me to be bullish when all the signs for being bearish are so easy, given the fact that even the higher time frames are telling you that it's pretty obvious that we're, in a sell-off mode, right? But let's just say, we're looking at the bullish count as well as the bullish potential. So I could make the argument that, this could be a 1, 2. We could be, this could be a 3. This could be a 4. And we could be in the middle, or I guess could be starting a 5. And that could take us to, this previous consolidation before we broke down. Okay, so I think that's very possible, right? Alternatively, right, we could also say that maybe this is the big 1, this is the big 2, 3, we're going to go all the way up to, 8,000, 8,500 or something and higher. So, the bullish argument is there as per counts, but it's just really hard to say given the fact that the macro environment of how the global indices are faring, the fact that oil is selling off, the fact that the S&P 500 is selling off, at least the futures markets, it just for now doesn't seem that great. So I would say it's much easier to be a bear as per the technicals that are outlined, rather than being, a bull just for the sake of the fact that, oh, we've sold off too much. Like, that doesn't really mean anything when you're facing a recessive environment, when, jobs are being lost, when entire economies are being shut down, when all people are looking for is cash, right? On the Cryptosomniac page the other day on the Twitter, I put up this chart and I said that, if you look across the board, the S&P 500 was going down, oil was going down, gold was going down, everything was going down except the dollar. Okay, the dollar, which is this black line right here, all right, was actually going up. So what does that tell you? That means that there's a massive deleveraging happening across the board, meaning that everyone wants to go from assets and investments into cash, right? So when people want to get into cash, whether it's Bitcoin or gold or dollar or the 10-year treasury notes or anything, they are scared for what their future holds, what next week holds, what next month holds, because you never know when someone is going to lose their job, or they've already lost their job, they don't know how to make ends meet, and so they're going to sell everything, right? Whether it's Bitcoin or their gold investments, their stock investments, etc., because you got to eat. So the point is that in this particular instance, it's best to be a little bit careful in terms of having bullish outlook for Bitcoin, and it's rather possibly best to just have a neutral outlook at best. All right, because obviously I think the bearish outlook is much easier. Bullish outlook is much tougher right now, given the fact that you're already in this descending channel now. Okay, so that's kind of my take on the markets. I'm still short biased. I'm shorting the market. I don't really know if this week is going to be the week where we bounce. As for the U.S. markets, I think the Senate is looking to pass the fiscal stimulus bill. So maybe when that happens, we could pump up a little bit. It's very possible. But until then, maybe we might bleed a little bit more. Okay. All right. I think that's pretty much it, folks. I hope you guys enjoy this content. And yeah, I'll catch up with y'all soon. All right. Cheers.